Hello everyone, welcome back to Triumph Trust FX channel. Today we'll be looking at another trading approach on smart money concept using market structure and supply and demand zones. If you are new to this channel, do well to subscribe to the channel and turn on the notification bell to be alerted anytime I upload a new video. If this video makes sense to you, you can give it a thumbs up. I have a free Telegram group, and the link to that Telegram group is on the description of this video below. Right, so before we get started, all you need to know is market structure and supply demand. And to help you so that you will not stress yourself, I have two indicators already that will mark out the structure and also give you the demand and supply zones that we'll be looking at. So one of them is the smart money concept Lux Algo indicator. Is on TradingView. It's a free indicator, and on this the only setting you need is just to get your market structure. Right, so this is the indicator. I would like you to check show internal structure, then you also check swing structure. So show swing structure. Those are the two important things I need on this indicator. So once you tick this, that is okay for me. So every other thing can be changed. So you can remove every other thing. You may leave this show swing points, show strong and weak level, but I don't want any other block. I don't want equal highs or equal lows. I don't want fair value gaps to show, and I don't also want I don't want this premium and discount zone to show. No daily, weekly or monthly lines. So just with what you have here, just leave it the way it is. You can either check this, but let me scroll slowly so that you know what I did. So auto threshold is checked. Then show swing points, show strong and weak, high and low is checked. Then show swing structure is checked, and finally internal structure is checked. That is all I need on the smart money concept indicator. Then the second indicator is a DIY custom strategy builder, and here the only thing we need is the supply demand. So this is how it looks like on my setting. Just take a look and you can set it the same way, but the only thing I need, as I said, is the supply and demand. So you cannot check every other thing and leave that supply and demand. So scrolling that to where you have this switchboard, uncheck every other thing and check supply demand zone. That is just what I need, and that is the blue zones that is marked on the chart. Now let's look at what you need to watch out for before you take any entry. Number one is we want to see the demand zone, which is also our POI, printed. Then after the demand zone is printed, we want to see price will definitely trade out of that point before the zone will be printed. Then we want to see price come back to retest and reject from the demand zone. On rejection from the demand zone, we want to see price break structure, which is the dotted line is internal structure, the bold line is the external structure or swing structure. So we want to see price break structure. Either internal or external or swing structure is fine, but as far as price after the retest of the zone, what happened before the retest of the zone doesn't matter to us here, but after the retest of the supply or demand zone, we want to see price drop to break structure. Then that is when you set a pending order at the demand zone, because I'm expecting that price will pull back to retest that level. So you will either set your your pending order for sell at the supply zone, or you bring it down a bit. But whatever it is, I will set mine at the supply zone. So that is where you are going to get your entry. Set your pending order for a sell at the supply zone, or you give a spread space, right? Then your stop loss should be the size of your demand or supply zone times 3 or times 2.5. So your stop loss should be above it. It should be bigger than 1 times 2 of the supply zone. That is where your stop loss will be, and your target is going to be where price broke structure before coming to retest. So first target will be here, this level. Then your final target should be what are you seeing below here, from the lowest point price got to in your chart before moving to this, before creating this high. So our final target will be around this level, right? So that is it. But you must ensure that by the left you have a place where you can place a target. So what I mean is you have liquidity levels to your left before you take the entry. So if we take our entry, set our entry here, so setting a pending order here and putting our stop loss somewhere here, our first target is going to give us, that is 1 to 6.4, right? So that is our first target. Then our final target, let's see what our final target will give us. So as you can see, our final target will be at 1 to 16, and currently it has dropped up to 1 to 13 or 1 to 14. Let's see. Yes, more than 1 to 14. It dropped up to 1 to 14.7, but the final target is this area around 1 to 16. So it's better in a higher time frame, 4 hour or 1 hour time frame. Going to the lower time frame, there will be so much noise, but once you get this is going to be a long-term trade. It's not a trade, it's not going to be an intraday trade, right? So that is it. For this example is from GBP CHF, right? So that is just what you are looking at for on this smart money concept approach of trading. So I will look at another example. Let's look at GBP NZD. Something played out on GBP NZD. Yeah, so this GBP NZD, if you look to your left, you can see we have some area of liquidity here. But let's start from the top. Looking at the top here, when price broke to this level, price dropped, leaving us with a supply zone. That is our POI, point of interest, right? So what happened on before price come back to retest is not so important to us, but price drop, came back, retested the supply zone and rejected from it, breaking structure. Internal structure was broken here, and immediately after that price dropped a bit, but we didn't see price breaking more structures, but started pulling back. So as soon as we have our break of structure here, we set our pending order for a sell, and looking to the left we can see there's an area of liquidity where price will drop to, right? So our pending order will be set at the supply zone, right? And I said that our stop loss should be around 1 to that is the size of our supply zone times about 3 or 2.5, right? So that's where you put your stop loss to. Then our first target is going to be where price broke structure before, which is this level, before it came for the retest. So we're looking at this level. So after this break of structure, price pulled back to this level. So that is where we're looking at first to take our first entry. That is around 1 to 3 on this. Right, so that will be your first target. Then we also said that our second target is going to be the lowest point you can see on your chart before price pulled back to that, the high it got to before giving the setup. So putting our second target here. So this will be around 1 to 11 as second target, and it was achieved, right? Look at it, it was achieved. So on GBP, still on this GBP NZD, as you can see, before price finally got, before price got to our target, we had another setup here. You can see that price dropped, leaving us with a supply zone. Our POI came back to retest. After this retest, price dropped, but we didn't see a break of structure. Came back the third time to retest, and finally dropped, breaking a structure here. And when price broke that structure, price dropped to our final target where we were already expecting here. So target has been achieved. So to me, it wouldn't be advisable for us to go back to take an entry, but if this entry would have been taken, it moved well, right? It was profitable. Price really dropped back to this level and below, but I will not take that because I already had a setup here that was running. And looking at your left here, we don't have any close we don't have any close liquidity level that we can target for this second sell, right? I'll give another example for a buy, which is on Euro GBP. So looking at this Euro GBP, we sell price drop to this level. When price pulled away, we had a demand zone here formed, and we had a liquidity level where we can target to our left. So now on the first retest of the POI, price got rejected, but there was no structure, no structure was broken here before price came back again the third time, that is the second time, to retest and pull away. We had some consolidation before price finally broke structure at this point. So to me, I would take this as far as after the first retest happened, price did not break structure before this second retest. These highs were not taken out, so I will go for this, right? So we have price rejected from a POI, a demand zone, got retested. All we need to do after the second retest is to wait for where price will break structure, which it did here. Then we wait for an entry on the demand zone. Remember, where price broke structure here before coming for our entry is our first target, and the final target will be at this the current highest point the price got to before dropping to come and form this setup. So we'll be looking at here for our first target, and at this high for our final target. So let's see what happened here. So taking our entry at this point, setting our pending order for a buy at that point, we'll make sure our stop loss is 3 times the size of our demand zone. So it will be somewhere here. I'm not measuring, but just a guess. And here first target was already 1 to 2.5. that was the first target, and we're expecting that price will get to the second target, and looking at our second target, currently price has gone up to 1 to 10 risk to reward ratio, but our target is around this level, which is 1 to 17 risk to reward ratio, right? So this setup, we may not be seeing it every day, but when it comes, you know that you are going in for a long-term trade, and that is going to yield you a lot. Imagine a trade that will give you 1 to 17 risk to reward ratio. That is huge profit, right? So that is one very good advantage about that's one advantage of this strategy. So I want you to take your time to go listen, watch this video again, set up your chart, monitor it for a while, maybe 1 month, 2 months, and see the outcome before you put your real money into trading this particular setup, right? So on the scriptures I have, on the screenshot I have, so this is on Euro GBP, expecting price to get to this level, which is going to be around 1 to 17 or 1 to 18 risk to reward ratio. This is GBP CHF. This was when price started moving, and how price got to this level, and we're expecting the price will still drop to this final target, right? This was GBP NZD, the first setup, and before price got to, after price hit the final target, this was another entry that came up that I said I do not advise to be taken, but this was when price, it was triggered not quite long, and price actually dropped nicely on that as well, right? So take your time to go over this strategy. If you need any questions, any help, you can comment, or you can send me a DM, or join my free Telegram group then to ask any of your questions. I hope this strategy will make sense or improvement to your trading career, and I wish you all the best.